For more on this, I'm joined by Mark Zandi, chief economist at Moody's Analytics. Mark, thank you for coming in. Are they cutting enough, or actually are they cutting too much?
Well, I think they're doing the right thing. I think they've put forward very credible fiscal austerity plans, and they seem to be executing, at least so far. Now, it's a tough road. Their economies are obviously very weak, and it's going to make life difficult for them. But I think, at least so far, they're following through.
Mark, I was reading your notes, and actually something worried me. Probably investors are worried as well. On the risk of a double dip, you've now put it in 1 in 3 chances, but you say that just a couple of weeks ago, you would have put it as 1 chance in 4. What's changed?
Well, I would say 6-8 weeks ago, I would have put it about 1 in 4, now 1 in 3. And I'm talking about the U.S. specifically, the U.S. economy. There's really the fallout from the European debt crisis on U.S. equity prices, and the fact that U.S. economy is very sensitive to what's going on in the stock market. U.S. businesses in particular are very sensitive to their stock prices, a signal, and high-income households also are very attuned to their financial net worth. When stock prices came down, it knocked the wind out of their confidence and has pushed it. I don't think it's derailed the economy. Certainly, it's sidetracked it.
But it started in Europe. I mean, is there anything that governments here need to do to actually reassure the rest of the world that everything's under control?
Well, I think they are. I think the response, the policy response in Europe has been very, very credible. But they do need to follow through. So far, so good. And hopefully the European economy hangs together reasonably well so that they get a little bit of a tailwind here so that they can follow through.
Mark, how concerned are you about what we heard at the IMF meetings? Because actually there was a lot of talk, but nothing concrete came out of it. And they talk about these global imbalances, that they're concerned that there's possibly currency wars. But what can we actually do about them?
You know, I think this is a little overdone. I mean, if you just take a step back and take a look at the sort of broader historical record, these movements up and down in currency aren't particularly disturbing. Now, clearly, there are things we need to work on. The Chinese need to revalue in an orderly way going forward. But, that's in their best interest, and I think they will do that. Policymakers should be nervous about these things, but I don't think that, at least so far, this is a bigger, broader problem for the global economy.